Markets are down about 850 points on the Dow, about 65 points down on the S&P 500. That's much less percentage-wise. And the NASDAQ is down as well, but much less than the other two indices. Perhaps that's because interest rates are down. Let's bring in Michael Lee. Michael, you are known as a super bull. I would assume that on a down day like today, you'd be buying up some stocks, no?
Yeah, absolutely. I think you got to buy on any weakness. And people out there looking at these variants need to realize the history of a virus is like that of the Highlander, and that these viruses want to stay immortal. And to do so, they become far less deadly and far more transmissible. And so until there's a lot more information out of this, I wouldn't really panic. But on these days where there's somewhat irrational panic, especially on shortened trading days with low volume like today, you can find some real opportunities to get involved. So
now, Michael, let me just ask you, even before we heard of this variant, or before it got a lot of publicity, we were kind of seeing a ceiling on the Dow, at least, whereas when it popped up close to 36,000, it would come down again. Didn't you see that as a ceiling for the bull market, or no?
No, not even remotely. I think you have a few factors that are going to push this market higher. I first like to say no bull market is perfect, no economic expansion is perfect, and there's certainly some issues out there in the economy, but Wall Street analysts are far too bearish on earnings growth for the S&P 500. It's been a story since we've come out of the pandemic. In this last quarter, they were expecting 27% earnings growth. We came in close to 40%. I think that trend of analyst estimates being too low is going to continue for this foreseeable future. Additionally, there's $4.5 trillion in cash on the sideline and close to $1 trillion of announced buybacks in the stock market from the S&P 500 companies. So we have this wall of cash that's going to come in and meet any sort of massive sell-off, and I believe we're going to have a slow grind higher. Do I think we're going to sprint 20% overnight? No, but I definitely think that over the next 12 months, we're most likely to see a double-digit return in the S&P 500.
Now, on a day like today, where the markets clearly are spooked by pandemic fears, would you buy into those stay-at-home stocks like Peloton, et cetera, Netflix?
Yeah, you know, the one that I would be buying, it's already up today, though, is at Amazon. I think I would be looking out 12 to 18 months, and that if these stay-at-home stocks are rallying on days like today because of this irrational fear, for the same reason I'd be buying, I'd rather buy beat-up stocks today than buy into the stocks that are winning in the face of this fear, because I think market moves like this tend to be a little bit irrational. So you want to pick up, you want to stay away from the things that are irrationally moving to the upside and be buying things that are irrationally moving to the downside, if that makes sense.
Excellent. It sure does. Michael Lee, good to see you. Thank you very much. Have a great weekend. Let's take a look at the Dow winner.